Partner at Geosphere Capital Management, Arvind Sangar, to talk about the intense volatility we've seen over the last couple of days in global financial markets. Arvind, thank you so much for joining us on the show. We speak at a time where we've just seen those prepared remarks of the Fed chair, and she seems to be indicating, and she seems to be acknowledging the tightness in financial markets and, yet giving an indication that the Fed is going to be data dependent. Futures as we speak, Dow futures are up and about, so is Europe. The risk off sentiment has waned to an extent. But what have you made of this intense volatility, and particularly the kind of talk that we've seen around banks, the kind of talk about comparisons back with 2008?
Well, I think that, some of the comparisons are maybe a little bit exaggerated, but I think there are real concerns underlying it. And the real concerns underlying it is one new concern I should mention. When you had Mario Draghi make comments very dovish about doing something at their March meeting, you had the euro weaken for 2 days, and then it started strengthening again, which is negative for Europe. European equities are sold off. When you had Japan, the BOJ under Kuroda go to negative interest rates a few days ago, you had the Japanese yen weaken for 1 day. So, the euro went weakened for 2 days, the yen weakened for 1 day, and then started strengthening again, and the Japanese markets started weakening. So one of the big concerns that investors have is that are we reaching the end of the omnipotence of the central bankers' ability to keep doing other, monetary tools to ward off problems. And I think that that's the real challenge, is that if that effectiveness is waning, then that creates a new risk profile for investors globally. And then you do have issues with emerging markets where there are financial problems, the energy sector where there are financial problems, and so there are going to be banks that are going to be caught with bad loans, and this could be a new round of challenges for some banks. But I don't think it's the kind of interconnected global financial crisis to a la 2008. This is a more classic banking issue where some sectors or some countries could get into trouble, and a bank that may have too much exposure to those could get into trouble. So I think that's the backdrop. I think global growth is clearly, and therefore the central bankers' ineffectiveness in global growth being weak is the bigger problem, and obviously the China risks and attendant risks for anybody who has exposure to China.
Arvind, I must say that you seem to be sounding a little more cautious to me today than perhaps a couple of weeks back. And if this is the case, if this banking risk, at least to an extent, is real, and you just mentioned China yourself, and we're anyway dealing with, rock bottom energy prices and other commodity prices, then should global markets, and India included, be ready for perhaps a slightly longer and perhaps a slightly more savage ride down?
Well, I would say that I would actually turn the question on its head. And I would say that one of the places where we are getting much more concerned, and I've talked a little bit about this, but maybe not in the amount of concern that I'm now feeling, that one of the places where you could have a banking crisis is India. And it has nothing to do with global factors. It has to do with the banking sector, which is, frankly, large portions of which are seriously in trouble given the amount of bad loans that they have either recognized or still to recognize. And you have a system which is frozen in place because the government is unable or unwilling to commit the amount of capital needed to recapitalize the public sector banks, which are frankly bankrupt for all practical purposes in terms of the amount of bad loans versus the small amount of equity. So India is not immune. It has its own problems, and it has unfortunately not done anything to comprehensively deal with its own banking sector. I don't think the problems are insurmountable. I don't think the problems are, unfixable. But whether it's passing the bankruptcy law bill, which will help resolve kind of how to deal with this, because the court system is highly inadequate and incapable of dealing with the situation of the bad loans and dealing with that, or recapitalizing the banks in some way, shape, or form. It's something that India needs to do for its own recovery. And I think, therefore, the part of the reason you're seeing the banks sell off so much in India is not because global banking is in problem, but because India banking is in problem. So I think that India is no longer an island which gets a free pass. It is in the heart of its own storm which is not connected to global factors, or it is connected to global factors because a lot of the problems are in the steel and metal sector, which are connected to a China slowdown.
Arvind, that's a really, really important point that you've raised there on Indian banks, and that's the real big local debate here as well. And we were seeing the likes of a Punjab National Bank fall 10%, and we're still waiting numbers from, of course, State Bank, etc. But given your concern on Indian banking, and you're actually saying that this could be a full-blown, crisis, how much more for the index then? Are we just sitting at the tip of the iceberg then at 7,200?
Well, I keep hearing about a lot of people going to the finance ministry and making presentations on the banking sector. So I think in that sense, I don't know if it's the budget or if it's in connection with that, it becomes more critical here, which usually I don't pay attention to, are they willing to take some tough action and some necessary action and some, recapitalization of the banking system, because this is an important thing that cannot be kicked down the road much more. And also, we talk about Parliament not functioning, having a reasonable, bankruptcy law in place, which is needed. I'm not sure how that'll work for existing, troubled assets or not, but I think that'll be helpful in terms of you recapitalizing the banks. You want to make sure that, you have a healthy backdrop for future problems that come up. So I think this becomes important. In the meantime, I think the index will remain at least range-bound, and I think if you don't see anything out of the budget in terms of taking a hard decision on the banking sector, then I think you could see another leg down. So I think the market is unlikely to go up unless this happens. And could it go lower? It certainly could, but I think the banking sector problems are becoming larger than we anticipated, and the lack of action from the government is becoming glaringly obvious now.
Very quickly, Arvind, I'll make this my last question. If we don't get anything specific on the bankruptcy bill in the next couple of weeks, or something specific in terms of dealing with this NPA mess, would you hazard a guess? How much lower for the index? 5%, 6%, 10%?
Well, I mean, I certainly think it's going to dip below 7,000, but that's a very small number, right? That's only 3%.
Yeah.
So, then it becomes more, I think, a question of 5 to 10% is not inconceivable. It depends on how the banking situation plays out in terms of the bad loan situation. But, you certainly could risk going back to, the 6,800 or lower. I'm not sure. That's not our central case, but that's a concern we have right now, that the banking sector is such an essential underpinning to the whole economy and the market. That we need to have a greater sense of where things are going, and that's missing right now.
Good talking to you, Arvind. Thanks so much for bringing out some of those points. Thank you so much. Well, that is a big voice, and a voice that is sounding fairly cautious, not just on the